Hey everybody, Russell Gray, co-host of the Real Estate Guys radio show, here with another edition of Boots on the Ground. And this is on precious metals, and we've got our good friend from American Gold Exchange, Dana Samuelson, with us. How you doing, Dana?
I'm good, Russ. How are you today?
I am excited. I have really been looking forward to doing this. I feel like we could do a Boots on the Ground update with you on a daily basis because there's just so much happening in precious metals. Even though this is the August edition, technically we're still in July. We're at the tail end of July, but obviously on Monday, the 27th, we got an all-time dollar high in gold. And you said that you've been running around like a chicken with your head chopped off. What's going on?
People are responding in every single way. We have people that want to buy. We have people that have had gold for quite a while that want to know what it's worth today. We have people that want to take advantage of the higher price that are sellers. And then we have people inquiring about how to buy gold. So it's coming at us in four different ways. And it's just nonstop. It's been nonstop for a week and a half now. And it's all predicated by the prices of gold and silver taking off over the last 7 or 8 days, as you're well aware, of course.
Oh, definitely. I mean, I've been watching this since I was in grade school, being a coin collector, watching the silver come out of the coins and wondering what was going on, and being in the 6th grade and watching Richard Nixon on TV take the world off the gold standard. I don't know why, but I'm kind of like an eco nerd, and I've been just interested in it since I was a kid. And of course, I lived through the stagflation of the 70s and the high interest rates and the Volcker reset of the early 80s, and then the activist, Greenspan put that started in 87 when I really started to pay attention. And then, I read 1995, The Creature from Jekyll Island, and understood really what the dollar was and what it was no longer, and how it was controlled and manipulated, and where money came from, or what we call money, currency, came from. And then the distinction between currency, which is dollars or any other currency, and money, which is precious metals, and the importance of knowing the difference as an investor. So, kind of always added that into my personal thinking. And then, of course, on the show, especially since 2008, I think people have been a lot more open to seeing the bigger picture. And of course, right now, I think the reason you're experiencing what you're experiencing is it's just popped up on a lot of people's radar. But the dynamics underneath what's happening have been going on for a while. So from your perspective, Dana, you're there kind of in the trenches, but I know you watch the markets and you've been in the game for a very, very long time, and you're uber connected. Is there anything different about what's going on now? Because this is the first time gold's been over 1923 since, I think it was September or something like that of 2011.
Right.
Is this kind of just a repeat of that? And is silver going to go? I mean, do you see the dollar regaining strength and gold retreating back down into, 1,000 or 1,100 like it did? Or do you think that this is different?
No, I think this is completely different. The debt that we keep piling on will never be paid back. And it's becoming, we're reaching a turning point and a tipping point here that I think may be a point of no return. Part of it has to do with the debt that we have. Obviously, the ongoing...
The debt being the United States.
Well, the debt, the United States...
Or the whole globe.
And the whole globe. I mean, it's on an unprecedented scale right now. And, I mean, Chairman Powell said today during his Fed presser that they're going to do whatever they need to do to backstop as much as they can. Which,
well, the challenge with that, as you and I both know, is they only have one tool in their toolbox.
Right.
Everything is a variation on that tool. It's got maybe different attachments, but at the end of the day, they can flood liquidity. They can lower interest rates, which creates liquidity. They can print money and purchase bonds, which is how they lower interest rates. They can fund deficits and get the money into circulation through the federal government spending or giveaways, whatever it is. But it's a one-trick pony, which is a dilution of the dollar. Just keep adding to the collection of dollars in circulation. At least that's the way I see it.
Well, I think you're seeing it exactly as it is, and that is why gold is responding. We still have yet to be fully revealed the economic damage that the COVID virus is creating in the United States. In a day or tomorrow, we're going to get probably we will get the worst GDP quarterly print we've ever had at minus 30 to 40%, maybe minus 20%, but it's going to be astronomically bad. And that'll be a head snapper for some people. I mean, for the way the economics have been going for the last 3 or 4 months, the writing's been on the wall if you've been paying attention. And a lot of people, sadly, have not been. So this gold price is like the canary in the coal mine saying, hey, we're in trouble. That's why gold is doing what it's doing. And that's why silver is doing what it's doing also. And
Hey, well, and the thing is, Dana, you marry that to some of the headlines, right? I mean, when silver broke out last week, in the Real Estate Guys, we did a newsletter. We talked about the soaring price of silver. And to me, silver had kind of been behaving as an industrial metal, suppressed kind of the way oil prices had been because of soft industry, because of the lockdown. All of a sudden, it takes off. And I'm thinking, well, it's sure not because they're selling a lot more cell phones or making more solar panels, right? It's not industrial. So it has to be monetary, which means that I call it Cinderella silver, got an invitation to the monetary ball and is now being invested in by people who are divesting themselves of currencies, including the dollar, which used to be the safe haven, and they're moving into precious metals. And gold, of course, is in the nosebleed territory, at least by its historical pricing, and the big screaming value is silver. So in your shop, what are you seeing? Are people favoring silver? Are they favoring gold? Where's the level of interest?
well, we do a lot of both. It's been high volume in both gold and silver. We're not doing any volume in platinum or palladium to speak of. And most people end up in dollar volume, spend more dollar volume in gold just because it's more compact, it's easier to store. It's easier to ship because of the weight and dollar value is attached to silver relative to gold. But we have been selling a lot more silver, especially over the last 2 months. And this week and last 10 days, it's all ramped back up again. And we're getting back into some supply squeezes again.
Yeah, I was going to ask about that because I've been reading. I know that the U.S. Mint, I think, has sold like 3 times as many Eagles this year already as they did all of last year. I know that they are curtailing or suppressing production, allegedly, because of COVID-19 issues. And then, of course, I've been following a little bit about physical deliveries and the physical demand in the futures markets, right? So I've just read that COMEX ended up having to make a physical delivery of like 120 tons or something like that. So I mean, usually these guys just flip the paper back and forth and they're trying to make dollars on the spread. But now these people are doing these big contracts and they're backing up the truck and going, yeah, fill the order.
Right, right. So demand is off the hook right now. Every way you look
Physical.
at it. Yes, yes. And physical on the street is higher than the spot price by quite a bit. Again, it's surging again. The U.S. Mint has had production problems because of the COVID virus. They can really only produce one metal at a time, and they focus on gold 1 week and then silver the next week. And they just cannot keep up with silver. They never got caught back up after the March surge. Premiums on silver eagles never relaxed the way they did with other sovereign minted coins like the Canadian silver maple leaf or the South African silver Krugerrand. But now we're seeing premiums starting to creep back up again for even those items. The Royal Canadian Mint's behind. Premiums on maple leafs have gone up $1 in the last 2 weeks. And premiums on silver Krugerrands and Philharmonics and Britannias are up 50 cents in the last 2 weeks. So the squeeze is back on again. Gold is still doing all right, but I assume that we're probably going to get into a gold squeeze as well.
Well, just for, anyone watching this that is like, it's a little bit over my head. I totally get it, right? I remember when I first started exploring this and, I'd go to the industry conventions, I'd listen to you guys jibber jabber, and I'm like, I only understand like every third word. I don't really know what you're talking about. But Dana, you and I did a 9-part series we called Making Sense of Silver, everything you've always wanted to know about silver, but didn't even know to ask. And so depending on when you're seeing that, that's either available or will be available very shortly. It's in post-production as we're recording this today. But you can find out about that by sending an email to silverseries@realestateguysradio.com. We'll either put you on the waiting list, and as soon as it's ready to go, you'll get it. Or if it's ready to go, you'll get it. It's totally free. We do want you to know it because, you know, most of us are out there investing. We're borrowing in dollars. We are flipping properties, hoping to accumulate dollars. We're putting dollars in the bank. We feel like if we have dollars in the bank, we're flush, we're rich, we're liquid. There's a whole lot of risks right now, both in counterparty risk and inflation risk in holding dollars that many people, especially Americans who have a difficult time thinking outside the dollar, just aren't aware of. And if you understand that currency is fine for trading and you need it to trade, to buy and sell things, and that's fine. But for your savings, when you're going to be saving, think of gold and silver. And I'm talking to the real estate investors in the audience. Think of gold and silver on your balance sheet as equity. Okay, it's equity. And so one of our favorite techniques is to take your real estate equity and convert it into precious metals. And so you still have equity on your balance sheet, but what you have is you have a better quality of equity. You have a more resilient form of equity. You have a more private form of equity. You can access it and convert it into cash or borrow against it much easier and much less expensively than real estate equity. And you can shelter it from the liability of the property. So I'm doing a whole seminar tutorial on that. In fact, Dana, I may invite you to come sit in on pieces of that with me, but I want people to understand that just because we're the real estate guys, I mean, ultimately real estate is just an investment inside of a bigger economic picture, and it's only part of your real asset portfolio. It should be a major part. But precious metals have a role to play too, both in the economy and the central banking system, and also in your individual portfolio and in your strategies. So we're paying attention to it. And right now it's an exciting time, very exciting time. So what else do people need to know about what's going on right now as we sit at the end of July in 2020 for our August update?
Well, gold in dollars is really just catching up to what's happened around the world over the last 18 months, where it has already set new highs in the last 18 months in rupees, in Japanese yen, in British pounds, in euros. Virtually every major currency had a record high gold price.
So in other words, for everybody, the way I look at it is everybody else's currencies are failing also. And the only reason the dollar wasn't failing is because people who had failing currencies were buying dollars as a place to hide from their failing currency. But now the dollar just joined the I'm at an all-time low versus the gold club, right? Different way of saying the same thing you're saying. So it's not an all-time high. It is an all-time high, but it's an all-time low for the currencies against the metals.
Right, that's exactly right. So gold has been gaining against other currencies. And as the Bank of America put it so eloquently about 3 months ago, because you can't print more gold like you can print dollars, like the Fed is doing right now. So part of the reason the US lagged a little bit behind the rest of the world is our economy held up better longer. But now that is all rolling back over again with the continuation of the COVID virus throughout the country. We're not going to go into a V-shaped recovery. The debt's going to keep piling up. The economic damage is pretty severe, and I don't think most people still realize the kind of economic destruction that we've seen in this with job losses, and they're not coming back fast. And that's why gold and silver are surging. And you're exactly right about silver taking on a monetary role over its a role as a commodity. In the last 2 weeks, especially with it surging over $19 to as high as 20, you know, in the futures market 2 nights ago, it hit 26.50 before a correction hit.
Yeah. Yeah. And I think people need to understand this too, because the last time gold hit its all-time high of 1923 in 2011, gold was about 50, almost 50. And that silver was almost 50. And it was the second time in its history that it had been that high.
Right.
So here we are now with gold at 1950 maybe or so as we record, and you know, up and down it varies. It touched on 2000 and got slapped back down. That's what a resistance point is. It hits and traders are like, oh, and they take their profit. But then after it, you know, our friend Andy Tanner, who teaches technical analysis in stocks, says, you know, you knock on the door once, you get rejected, but you don't give up. You ask for the second date, you get rejected, you don't give up. You knock on the door, and the third time's a charm. They open the door and let you through, and now all of a sudden, you know, you break break that barrier. It did that, followed that same pattern to get through 1800. And once it breached 1800, it shot all the way right through 1923, all the way up into 1980, all the way up to flirting with 2000 before it came back down. It still seems like there's a lot of momentum there, but coming back to silver, silver at 26 or 25 is still 50% below
Right.
its all-time high. So if you're like, well, I don't know if I feel comfortable buying something at a high, even though it might have a lot more room to run, and Bank of America thinks that gold has at least another 30% to go because they've got a price projection of 3,000. And it's interesting that that report that you talk about was actually titled, the name of the report from Bank of America was titled, "Because the Fed Can't Print Gold."
Right.
So an overt acknowledgement that the Fed is diluting the dollar, and smart investors are going to start seeking shelter in something that can't be done. But silver is unique because you can still get silver at 50% off its low at a time where you could make the argument, if in fact the world is embracing silver as a monetary metal based on where gold is at, silver's got quite a way to run in dollar terms, don't you think?
Yes, I think it's got an easily a $5 to $10 upside from here in the short term, and an easy double, as this market continues to evolve, which I certainly think it will, because the global economy that we have has been badly damaged around the globe. And as we said, it's not going to recover fast, and we'll just have to see, how well we can deal with the virus. But jobs that are gone, a portion of them are going to stay gone. There's real damage that's been done.
Yeah, I mean, I look at it like an economic heart attack, and your heart can stop beating and you can stop breathing for a few minutes. But if it stays broken for too long, pretty soon you end up with dead cells, dead organs, permanent brain damage, permanent organ damage, and excuse me, a tickle in my throat here. And so you have to just be aware that we're in a situation right now where every day this thing drags on, the fundamental structure of the financial system is in real trouble.
Right. That's
and
exactly right.
You need to be hedging against that. And I think that even if you don't fully understand, take a look at what people are doing. Central banks started loading up on gold big time 2 years ago, the ultimate insiders into currencies, and they're loading up. And now you see big investors starting to come in, and they're not trading. Their goal isn't to go from cash to asset, gold, to cash. Their goal is to get out of cash and into a real asset and stay there.
Right.
And especially true in some of these other countries, because as a culture, the Americans tend to be much more enamored of the dollar than they are of gold. But that's not how it is around the rest of the world, right, Dana?
No, the U.S. doesn't have a precious metals culture that the Asian market does, or the European market. So Americans are better trained now to buy precious metals because of what happened 10 years ago. But I think they've been lulled into a false sense of security over the stock market being stronger again the last couple months, and not being really told the truth about how much economic damage there really has been done to this country. So, I think that this market has a long way to go. If you look back into the last bull market from 2003 to 2011, there's three phases of that. You have the phase where the insiders, the people that are really following the market, what I would call the gold bugs, they get in first, and they help to push the price up, but they can't get it into a breakout mode. And over the 1370 ceiling that we broke over last summer is the breakout mode. Now we're into the momentum phase where people are following the trend and buying in. And that's still the second phase of the market that we're in. This is a confirmation of it now. The real blow off top comes later when the retail public and everybody wants to have it. And we're a long ways from that. So I think there's a lot of legs under this market still.
But they speak spike in prices, and the fact that, and people may not be aware of this as we're recording, but precious metals, gold and silver, have been the #1 performing in terms of appreciation asset that there's been in the last, I don't know, it's certainly year to date, right? That's my understanding. So, and here's the thing, especially with silver, and correct me if I'm wrong, Dana, because I often am, but it's my understanding that the silver market is tiny. And so it doesn't take very much money of the trillions and trillions and trillions and trillions of dollars that have been printed to step into silver seeking shelter to pump that price up high. And if people, you know, again, if you're out there in the desert and you're starving or you're dying of thirst, then and you want water, you're going to pay a high price to get it. And if
Right.
you're very concerned about the viability of those dollars that you're holding, then you're going to convert them into anything you can that you think is more viable. And precious metals are on that short list. And when that happens, whatever price you have to pay is the price you pay, because it's better than riding all the way down to zero. When someone like Goldman Sachs is coming out and publicly saying that the dollar status as reserve currency could be in trouble, this isn't some tinfoil hat conspiracy theory, non-establishment, you know, back scratching. I mean, this is somebody that's mainstream,
Right.
and they're coming out saying that. You got to be paying attention to that.
No, it's as big as it gets when Goldman Sachs says something like that.
Yeah.
I mean,
So that's the environment we're in as we're sitting here. And so we're going to continue with these boots on the ground updates. Again, if you're out there and you're listening, you're saying, gosh, this is my first entree. Dana wrote a report for us. It's in our special report library. You can get it, Precious Metals, at realestateguysradio.com. And then you can just kind of get a basic fundamental understanding. You should get on his mailing list, and he sends out updates and newsletters and things like that. But whether you're interested in preserving or parking some of your liquidity in precious metals, or like what I talk about, you know, converting some of your equity into precious metals and just changing how you characterize the equity that's on your balance sheet using precious metals as opposed to real estate. Doesn't mean you relinquish the real estate at all. I mean, you can keep the upside on both sides. It just means that you're divesting yourself to a degree, or isolating some of your exposure to the dollar risk. And people, I'm just here to tell you that cash is not a safe haven right now. Cash is something that people who are holding it are growing concerned about, and it's something that you need to be paying attention to. So precious metals is almost like a gauge, or to your point earlier, a canary in the coal mine, or maybe gold mine, to let you know that, hey, we could be in an environment where something substantial is changing with the currency. And anybody that denominates wealth, measures wealth, borrows wealth, tries to save currency, should be aware of. So welcome to the club if this is your first time. Order Dana's special report, Precious Metals, at realestateguysradio.com. If you're interested in the silver series at realestateguysradio.com. And if you want to kind of dig into that tutorial about how to convert equity into precious metals, Precious Equity at realestateguysradio.com. They're all free. So we're doing it because we think people need to know. Hopefully you're getting something out of it. If you have questions, you can send your questions or visit the Real Estate Guys at ask@realestateguysradio.com, or push on the button that says Ask the Guys, ask us questions. Because Dana and I are happy to answer your questions on these boots on the ground interviews. So if you have questions about precious metals, send them to us and then we'll address them. But we'll be doing this every month, maybe more often. Dana, thanks so much for being with us today. If something breaks between now and the next update, ring me and we'll find a way to squeeze you in. But I think this is the hottest thing going right now. It's super exciting. And people need to be paying attention to it, especially for those who haven't been paying attention. Any closing thoughts?
Yeah, the old trader's adage is the trend is your friend, and the trend for precious metals is decidedly higher against the dollar, and that's what's happening, and it's got a long ways to go. You're not too late to the party yet. If you're interested, follow Russ's instructions. You can get the special report. It explains how to buy the most widely traded, competitively priced, immediately liquid physical gold and silver items there are on the planet, for your educational purposes. So please.
Yeah, I mean, if you're a real estate investor out there and you like debt because it effectively allows you to short the dollar, you may not understand why debt on real estate makes you rich, but that's why. Okay. If you like debt on real estate, you will like precious metals. Right. And I'll just leave it at that.
Yep.
All right, ladies and gentlemen, thanks so much for your time and attention. Dana, thanks for your participation. And we'll look forward to talking to you on our next Precious Metals Boots on the Ground update.
Thank you, Russ. Great to be with you as always.
All right. Take care.